Live from Bloomberg's world headquarters in New York, I'm Kaylee Lyons.
And I'm Katie Greifeld, stepping in for Matt Miller. Welcome to Bloomberg Crypto. It's a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, Bitcoin bulls beware. Investors see the cryptocurrency crashing even lower. eToro consultant and trader Glen Goodman shares his view.
And calls for regulation growing louder. Former CFTC official Charley Cooper weighs in on the turf war for oversight of the sector.
And breaking point, we've got the latest on how Bitcoin miners are faring in that scorching Texas heat wave.
That's all ahead, but first, here's a snapshot of where the market stands at the moment. You have Bitcoin down about 2.5%, but still hovering near that $20,000 level, acting like a magnet for most of the past month. You also have Ether down even more, almost 5%, and that's usually how it goes. You have Bitcoin move a little bit, the altcoins move even more. But this one is interesting. You have Coinbase shares actually higher to the tune of 1.2%, even as Bitcoin falls. That's after JMP Securities actually cut their price target on Coinbase shares, but they maintained their outperform rating on the stock. That is boosting Coinbase again today. And Riot Blockchain, this is an interesting one, down a little bit today. That's after miners in Texas shut off their mining machines to sort of help out the state's struggling power grid. We're going to get to that later, Kaylee.
Yeah, we'll have more on that later on in the show. But first, we want to talk more about the price action and trajectory of Bitcoin, because the cryptocurrency crash may be about to get worse. According to the latest MLive Pulse survey, Wall Street thinks Bitcoin is more likely to tumble down to $10,000 than rally back up to $30,000. Here's a little bit of what investors and executives have told us about their positioning in crypto.
The volatility is excessive.
We struggle to find a valuation model.
I wouldn't necessarily allocate large chunks of my portfolio to it.
Nevertheless, it can find a place in that portfolio.
I am comfortable taking, smaller positions.
Folks have prepared long in advance for the crypto Bitcoin bear market. In fact, what they're doing now is finding ways to take advantage of it.
We have always advised our clients or investors to tread carefully.
We have an obligation to inform people about the risks of them.
It is, in some sense, a bet on a business model that has very much yet to be proven.
Now, that same MLive survey also shows that more than a third of the respondents say that Bitcoin dropping under $10,000 could be a source of wider market contagion. Bloomberg's Charley Cooper is taking a look at the true cost of all of this turmoil in crypto. Charley, it's high.
It's very high, Kaylee. There really is a cost. And if you take firms like valuations of BlockFi plunging, what kind of investor interest is there in putting new money into firms? Crypto startup funding has actually tumbled to a one-year low. And remember last year, there was soaring investment, though a lot of that investment happened as soaring valuations were taking off. But today, that leaves investors with large bruises. Let's go back to BlockFi, because FTX agreed to a capital injection, which could make BlockFi's preferred shares drop to $20 a share, down from $77 just at the end of April. And Liberty Street's private shares fund is just one such investor that it's marked its warrants to zero at the end of June. And now other companies are also seeing costs swell as they try to rush and make investors whole. CoinFlex, for example, has said that a single investor failed to repay $47 million, forcing that firm to pause client withdrawals. But now it's seeking to recover much more than that, a stunning $84 million, as it takes legal action against that client. Now, let's be clear. Investors who are flush with cash want to take advantage of the tumbling prices. Crypto takeovers have surged to more than $5.5 billion worth of deals, according to Architect Partners. And prominent investor Justin Sun has also told The Block that he's interested in spending billions of dollars himself. But there's also criticism in the industry and worries about so-called moral hazard. Binance CEO CZ said he would not necessarily do the types of deals that are shoring up a struggling industry, and that bad prospects should just be allowed to fail.
Bloomberg's Charley Cooper, thank you so much. And joining us now from our London studio is Glen Goodman. He's a crypto consultant at the trading platform eToro and author of The Crypto Trader. And Glen, I want to pick off where Charley left off, because beyond just the line going down on the chart, Bitcoin's price plunging, you are seeing sort of the ripple effects in the broader ecosystem when it comes to some of the companies involved. And it feels like we've already seen a lot of contagion already. But when you look across the landscape, are we going to see more shoes dropping here?
Well, we've got Sam, haven't we? Sam Bankman-Fried, the White Knight, coming in and trying to save the day. And, in every sort of crisis, I guess you need somebody like him to come up and at least try to sort of reduce the contagion that's going on. But by the same token, actually, CZ, the guy from Binance, the guy who runs Binance, the world's biggest exchange, was slightly critical of that approach. It's saying basically that if there is trouble, if there are bad companies or companies that are doing really badly, maybe you should just let them, sidle off into bankruptcy or something of that nature. And then he said words to the effect that, I'm paraphrasing him slightly here, but words to the effect that then you have a clean slate upon which you can build a base for the next boom. I mean, we know from 2008, 2009, of course, when you prop up failing banks and failing other companies, as governments did back then you're left with all kinds of legacy problems that just haunt the economy for years to come.
Okay, well, Glenn, you talk about a clean slate to build off from. Are we at that point yet where we can see potentially an end to the crypto winter, something in the form of a meaningful rally, or are we going to be stuck here in this $20,000 ballpark for some time?
Well, funnily enough, that survey that you just mentioned there kind of called me a contrarian, but it kind of cheered me up in a weird kind of way because, bear with me here, bear with me. I had a mentor some years ago, a legendary trader called Edsay Kota. You can Google him. He was absolute legend, made a fortune, and revolutionized trading techniques. And basically, he had an indicator that he used to call the magazine indicator. It wasn't very scientific, but what it basically meant was that when he saw on Barron's magazine a headline like "Raging Bull" with a big picture of a bull, rearing, and it's got its horns and it's got steam coming out of its nose, when he saw that kind of thing on a front cover, he would go, well, we must be at the top of the market. And likewise, you could kind of infer that when you start seeing headlines in newspapers that say Bitcoin is dead, the crypto market is finished, it's all over, then you can kind of infer from that that might mean that we're near a bottom. Doesn't necessarily mean we're right at the bottom now, but we're nearer the bottom than we are to the top. That kind of survey gives me confidence, you see, that when people are starting to feel really negative and we're seeing all those really bad headlines in the Financial Times and it's British newspaper, but in all the financial press, the Wall Street Journal, then it makes me start thinking that things are going to get better soon.
Well, let's talk about the feelings of individual groups of people as well, because in that same survey we've been referencing is actually retail that has soured more on crypto than the institutional players. And you've been looking back at the history of price action over the last decade, and you think institutions actually have played a massive role in the kind of immense volatility and difficult trading environment that this has become. Can you just walk us through that?
Yeah, I went back and looked at the chart of Bitcoin all the way going back to 2012, and I looked at it in quite some detail, every single movement, every single little chart pattern that formed. And frankly, for years and years, it was just textbook. It was a trader's dream to trade Bitcoin and the other cryptocurrencies when they came along, because they were literally like textbook patterns. You'd have a bull market and it would start like that, and then you'd get a little trading range and a resistance line, and bang, it would go up through it, and then another range, and then up through it. My hand's disappearing off the top of the screen. But you get the idea. You'd get the lovely movement upwards, and then the market would crash for a couple of years, and then you'd get the bigger upward movement. And it went in those waves. And then 2021 happened, and everything changed. Suddenly, you had weird things going on with the price, making unexpected moves. It was much, much harder for traders from that point on. And actually, the institutions that were getting in and employing complex strategies that were, of course, making those price movements more complicated and reminding me more of the Forex market, in fact, those same institutional traders were wrong-footed, because usually what happens is the rich people buy at the bottom and sell at the top. They've been doing that with every single Bitcoin wave so far, up until 2021, when they all started buying after it had peaked right at the top in November last year, and loads of them then had to sell much lower down in recent weeks and months, which must have annoyed them very much, and perhaps actually accounts for the fact that so many institutional people are keen to get back in because they've had their fingers burned and maybe they want to have another crack at it.
Well, Glenn, we don't have much time left, but take us now to 2022 and beyond, because we're at a moment where, like you say, maybe some of the institutions come back in. But according to that survey, I mean, you have seen retail sour a little bit. When does retail come back in?
Well, look, traditionally in both stock markets and now in the crypto market, retail, unfortunately, tends to get in too late. You know, as a trading educator, I try to persuade them not to get in too late. I tried to persuade people to get in July 2020, for example, which was when I saw the market starting to take off. That's when I got in. And I was getting out in the early part of 2021 from Bitcoin with a sort of 400, 500% profit. Meanwhile, lots of people who'd read my book were saying, oh, it's time to get in, isn't it? Because that was when the retail boom was starting to happen, but it was already too late. So, frankly, if retail are pessimistic now, that's not necessarily a bad sign for the market, because they tend to get optimistic rather later in the bull market instead of at the beginning.
All right,
That's
Glen Goodman
reality
of eToro, a harsh reality indeed. So great to get to talk to you and hear your enthusiasm and all the hand gestures as well. Really made that conversation better. Thank you so much. Now coming up, we'll continue the conversation and look at crypto regulation. We'll be speaking with the former CFTC official, Charley Cooper.
And nearing the brink, how Bitcoin miners in Texas are dealing with the state's struggling power grid.
And of course, to access all of the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
Regard unbacked crypto as essentially, in inverted commas, store of value in terms of money. And I say in inverted commas because I'm sort of well known for saying that I don't think they have any intrinsic value because there's nothing behind them. But they may have extrinsic value in the sense that people want to collect them. And I think it's important people understand them as such.
Bank of England Governor Andrew Bailey, who has in the past been a vocal critic of crypto, testifying to UK lawmakers yesterday. Meanwhile, in the U.S., Fed Vice Chair Lael Brainerd is calling for authorities to regulate the crypto market, saying, quote, "This is the right time to establish which crypto activities are permissible for regulated entities and under what constraints so that spillovers to the core financial system remain well contained." Greater regulation has always been one of the biggest risks in crypto, but a large majority of respondents in the latest MLive poll survey see government guidance as net positive for the asset class. Charley Cooper, former chief operating officer at the CFTC and current managing director at enterprise blockchain firm R3, joins us now for more. So, Charley, there's shaping what regulations are, and there's also just deciding who the regulator is going to be in the first place. Ultimately, when you look at kind of the crypto ecosystem and the SEC, the CFTC, the kind of turf war that's going on, who ultimately should have control over what?
Well, the truth is no one actually knows. There are a lot of strong legal arguments in different buckets. If you go to Washington right now, you've got many people at the SEC claiming that crypto is securities. You've got people at the CFTC claiming that many of these products are commodities. You've got the IRS that's treating them as property or potentially currencies for tax purposes. If you're a retail investor, or if you're even a mainstream industrial investor who has all the accountants and the lawyers in the world, you're still not entirely sure who you answer to. And that makes it very difficult as a regulated institution that's trying to play by the rules, but at the same time is trying to take advantage of the innovations in crypto to show up and do the right thing. When you're looking at Washington, it can be a scary place. Regulators showing up at your front door is a scary thing. And if you don't know who those regulators are, you don't know how to play to them.
So, Charley, I mean, how does this sort of end? Does it take, who is going to ordain one regulatory body over the other? Because obviously the SEC already has some purview over crypto, at least when it comes to ETFs, for example.
I think part of it depends on how quickly Congress acts. If Congress steps into the breach, and there is no sign they're going to do that during a midterm election and into next year, they can set the rules for where the appropriate jurisdiction lies between the various different regulators in the United States. In the absence of legislative action, regulators are going to start doing this on their own. It's called regulation. It's called regulation through enforcement, where they start filing lawsuits and they start issuing Wells notices to people. They start knocking on doors and taking information from them. And they make a determination at the regulatory level what Congress is unwilling to do at the level of legislative action. So at that point, if you leave it up to the SEC and the CFTC to start filing lawsuits, you find yourself in multiple years of protracted regulation where you're, and litigation where you're trying to figure out who's in charge.
And I'd love to hear your perspective on what you think the highest priority item is right now, because everything moves faster in crypto, but it almost feels that things are happening so quickly that regulators wouldn't even be able to keep up with it when it comes to exchanges, stable coins, bridges, the list goes on.
Well, it's pretty difficult, but I would break it into two categories. First of all, there's a massive consumer protection piece. One of the things that was different about this latest blow up in crypto, unlike several years ago, is that there were more moms and pops, more people on Main Street who had taken the money out of their pocket and out of their bank account that otherwise would have gone to car payments or to mortgages or tuition payments, and they invested it in crypto. And they got hurt by this, so I think that matters. I think the second thing that matters is at the institutional level, risk management. One of the things you saw in this most recent collapse has been almost unstoppable, unlimited is the word, leverage in the system, where people were borrowing almost unlimited amounts of money that they would then invest in crypto, which is a great business strategy if crypto is going to go up. When it doesn't, and inevitably the laws of economics apply to everything, they found themselves having lost much, much more money than they had on the table. And that's where you began to see the contagion with Celsius and 3AC and these other firms.
So on the subject of contagion, is this market yet at a point where it can pose a broader risk to financial stability? Is it a systemic threat, or we're not there yet?
I don't think we are, but that's not to say that we won't get there relatively quickly. Right now, the portion of overall economic activity that crypto makes up is a small fraction of the economy. This is nothing like the housing bubble that you saw in 2008 and 2009, which I realize is the other end of the extreme. But crypto grows at an exponential rate, or at least has. And when these crypto markets come back, and it might take 6 to 12 months for the markets to come back, if they continue the same level of exponential growth, 3 to 5 years from now, they will be a much bigger portion of the economy. And at that point, contagion becomes a real risk, not just to the crypto industry, but to the broader financial services industry.
And to everyone, in theory, that is involved in that
Yes.
system. So coming back to mom and pop, which you mentioned,
Yes.
and this is something that Lael Brainerd also talked about in her speech last week, the idea that you have to protect the consumer. How do you do that if there's no FDIC for crypto? What form should that protection take?
Well, I think there are a whole host of ways. There is no FDIC for crypto, and we have to understand how, if at all, banking laws and banking insurance should apply. There's a question about the disclosures that you wouldn't see under other asset classes, like the SEC puts in place for stocks and bonds and other things, mutual funds. You can't go online and buy a bunch of shares of stock without getting some level of disclosure to understand what you're doing. So there's the possibility that that exists too. Traditionally, there's not been a ton of regulatory trading in various different other retail trading in various different other asset classes. But the more you're willing to let retail customers in, the more the responsibility sits with the regulators to make sure they have the information they need to make a smart decision.
And what regulators will those be? Still a question we await the answer to. Charley Cooper, thank you so much for joining us, Managing Director at R3. And of course, he used to be over at the CFTC. And be sure to check out our Bloomberg Crypto podcast, which dives deeper than the daily market buzz to explore how this asset class is changing the way we live. Look out for that every week through the Bloomberg Professional app, iHeartRadio, or wherever you get your podcasts. This is Bloomberg. This is Bloomberg Crypto. I'm Kaylee Lyons with Katie Greifeld. Matt Miller is on assignment. Now to some crypto stories that caught our eye this week. And Three Arrows co-founder Zhu Xu is breaking his silence. According to court documents, he and partner Kyle Davies have not been cooperating in the firm's liquidation process after its collapse and bankruptcy filing last month. Zhu reemerged this morning with a tweet accusing court-appointed liquidators of baiting. The liquidators won permission to subpoena the founders along with banks and digital asset exchanges tied to the hedge fund.
And there's a new top-traded crypto fund in town. The ProShares Bitcoin Strategy ETF has overtaken Grayscale's Bitcoin Trust in average daily trading volume. GBTC had been dominating the space, but has seen volume tumble in recent weeks. And nearly all industrial-scale Bitcoin miners in Texas have shut off their machines. That's as the companies brace for a heat wave that is expected to push the state's power grid near its breaking point. The state has become one of the world's largest crypto mining hubs thanks to its low energy costs and liberal regulations on crypto mining. Joining us now is Bloomberg Crypto reporter David Pan for more on that story. So David,
there is a reason why they moved to Texas. It's just kind of backfiring now.
Yeah, exactly. Last year, when Beijing banned, the crypto mining industry, we see this huge migration of the mining industry from China to the rest of the world, specifically for Texas, because of its low energy prices and also, pretty liberal regulations on crypto mining operations.
But liberal crypto mining regulations, but why the miners? Why do they have to shut off their operations? What about all the other businesses in Texas? Right.
So when miners decided to plug in their machines into the ERCOT system, and then the operators would ask them if they would be willing to sign an agreement with the system, like whenever there's a energy shortage, and then you'll be the first to shut down, and then they agreed. And they agreed to that arrangement, and that's part of the reason why they have to shut down right now.
So what is this all likely to do to their profitability?
Right. So it is likely will make a dent on their profitability, just because they have to shut down the machines. Whenever the machines are shut down and you are losing money, you're not earning a Bitcoin from the blockchain network. So that means you're losing
well,
money.
And not to mention, your energy bills are probably through the roof right now.
All of ours are.
Yeah.
Right. I think that's really interesting, because a lot of the miners, they kind of anticipated the surge in prices, but at the same time, the Ukrainian war and the renewable energy has remained at a low level right now. So specifically in Texas. So those are the factors that the miners haven't actually anticipated in the first place.
And so, Texas, obviously, it's a hot spot, pun intended, for crypto mining right now. But looking into the future, could we start to see miners leave Texas?
Yeah, it's really hard for the miners who are already there, because they have built out their infrastructure. But I would say, a lot of new miners, they're kind of thinking about diversification into other states, cooler states, climate-wise. That's definitely something people are, pondering.
Yeah, well, we will see where these miners go as they deal with some of these energy shortages. Thank you so much to David Pan of Bloomberg, our crypto reporter, covering that story for us. Now, coming up next week, we're going to be live from the Bloomberg Crypto Summit, which will gather some of the biggest names in the industry. We'll hear from billionaire Sam Bankman-Fried, as well as Mike Novogratz, among others. Matt, Katie, and I all will be there at different points throughout the day. The summit starts in person and virtually at 8:45 a.m. New York time and continues all day on July 19th. So that is next Tuesday, 1 p.m. Bloomberg Crypto, that Bloomberg Crypto Summit happening all day long. Thank you so much to Katie Greifeld for stepping in for Matt Miller today. It was great to be with you.
It was a joy. Thank you.
It was a joy. This is Bloomberg.